Let's have a look now at the markets, and we start with the East African market in Nairobi, the Nairobi Stock Exchange. Now that continued to move downwards yesterday. It eased 14.74 points to go down to 4932. That's a drop of 0.3% there, and over the month also 0.3%. And then the shilling, that's been generally more stable since that election and hasn't moved much there, 0.12% down, and it's 83.8 at the moment. Let's go now to our Kenya market update, and in Nairobi is Reginald Kadzutu, who is an independent analyst. Morning, Reginald. Am I right in saying that the market has been more stable since that election, and the currency too? And just your reading of that slight decline yesterday and where the market is at the moment.
Let me start with the shilling. The shilling actually has been steady since the election, and I think every company is now planning themselves. They're seeing stability, and we should start seeing some dollar demand coming in, which will weaken the shilling a bit. But the central bank does have their job cut out, trying to keep a stable shilling, watch inflation, look at interest rates at the same time. So they're trying to juggle three balls, which in my personal opinion is going to be a very hard task, considering the current state of the economy. The NSE, yes, has been shedding, and I think I hinted on Friday when I was on the show that most of these counters are close to their 52-week highs, and they're about to start coming down, supposed to start taking profits. And clearly people have perceived that they're not going to break their 52-week highs, so people are taking profits. So we'll be in a period for a week or two where we see a huge volumes, but with prices declining. And also just investors having this awareness of the humongous task that the new government has in actually trying to keep a stable economy. It's actually weighing in on the market also. People are realizing that having a government is not a magic wand in everything turning around and everything blooming and all these other theories of smooth transition and stuff like that. So reality is also beginning to sink in into investors that it might actually not be a rosy start for the new government. It might not be a smooth road in them delivering the promises that they promised the Kenyans and the electorate.
Also, I think those promises were substantial, and it wasn't simply an election where you're promising to do one or two things differently. Substantial constitutional change, which implies disruption to the way things are done. On the one hand, optimistic, it seems to be a good system. On the other hand, it's difficult to do things and to change things and to move operations from one place to another. Within the government, there are issues of changing the bureaucracy and so on. So I suppose uncertainty dominated perceptions of the election, and now that's been replaced by a different kind of uncertainty.
Yes, true on that. There's a whole ideological shift that needs to go into the implementers now. As county governments settle down, who themselves are kind of autonomous to the central government, but working together in some way, have their own plans, have their own manifestos. So I think even before the president hits the ground running, he needs to merge the county manifestos in the 47 counties to his national agenda. Because the governor is going to be re-elected based on what he has done for his county and not what the national government has done. So everyone is going to be trying to push their own promises and their own dreams. So if there's no harmonization of these manifestos between the county and the national government, you will find we're going to be having a lot of pull and tag. And it will be murky waters going forward. It will be growth, but a very painful and staggering growth until we reach a point where there's actually smooth harmony moving forward.
Yeah, so it's going to be quite stressful. And of course, the great temptation for a government in this situation, just coming in, having made promises, is to print more money. And then we have the risk of inflation. So is the market watching that and worried about that?
I think any prudent investor will have an eye on the debt situation of the economy. The truth be said, the economy is actually not in a good state. If you look at the financial side of the economy, current debt is close to 1.8 trillion. They claim GDP is at 3.6 trillion, which I highly doubt is at 3.6 trillion. So we find debt to GDP ratio is somewhere above 50%. They're about to receive another $108 million from the IMF. That's also going to push up the debt. So if you look at the government's plan, government's roadmap, it's drastic, it's radical. They're planning on digitization, they're planning on free maternity. There are a lot of freebies they want to throw around, which they have to raise money for. And the only way the government can raise money is either to borrow externally, in which they call donor funds. We all know that donor funds come with an interest rate to it, or borrow locally. So the debt situation of the country is going to weigh heavily on how companies are going to invest, how industries are going to grow, and basically how investors are even going to perceive going into the stock market. Do you go into the stock market, or do you keep your money on the short end of the yield curve where you're earning 14, 15, 20% risk-free, next to risk-free basically, in a bank deposit, than put your money in a stock? So those are the things that will play on the Nairobi Stock Exchange and in the money markets generally, as we try and seek clarity on how they're going to fund their ambitious program.
Yeah, and as you say, if you can get interest rates like that for your money, then the stock market is very much a high risk and possibly low reward place to be. What about the individual shares? Any words on them at the moment? It seems relatively quiet. Banking sector more active than most. KCB was moving there. Equity Bank, CFC, Stanbic. On the stock side, like what I've always been hinting, that the election and the election results and the Supreme Court ruling all came in a time when we were having corporate announcements, dividend announcements, books closure. So there were independent activities happening in the market which were not even linked to the election. So if you were to just do a regression analysis, or try to find how much of a percentage impact did the election results and the Supreme Court ruling have on the market vis-a-vis the activities that are already in progress in the market. So you'll find we're getting into a quiet period until maybe we reach July, August, where again we start having maybe half-year results coming in and half-year dividends coming in. So if you look at the banking sector, the stocks that are moving, KCB and Equity, are normally the stocks that are darling to foreigners, stocks that have huge volumes. There will always be activity on those stocks. Right, and just we were talking about the destitution of the economy as you described it. Good news, the African Development Bank approving loans for the road project, 160 kilometers odd from Arusha to Holili in Tanzania, to Vita to Voi in Kenya. That's obviously a big project, and how important is it in terms of transport of goods and the economic relations between the two countries? It definitely eases the cost of traveling, of moving goods from Kenya to Tanzania and Tanzania to Kenya. Though I guess the relations still have to be on a government level, because there is a bit of anonymity between the two populations, with one perceiving the other as too aggressive, the other perceiving the other as too slack or too relaxed for doing business. So you'll find it will pave the road, it will open the door. The question is, will they get the people to go through the doors that they're opening? So it will improve trade, or it will make the trade that is currently there less expensive to carry out. Whether it will increase or improve trade, then that's another aspect. But maybe looking at it from the Kenyan side, on the roads that maybe are being built on the Kenyan side, with the government policy of buy Kenya first, I guess this will be the first test of seeing actually, are they going to give it to a local contractor? Is it going to go to a foreign contractor? Are they going to buy the cement and the produce, the butane and everything locally, or are they going to import them? So this will be a test for the government to actually see whether they are serious about buy local and whether it's actually achievable.